Right, let's start. Simple roundup. The market is a bit mental. Put it that way, right? So we are technically in a recession, technically, via the word of some ancient, I don't know, literature.
Not according to the White House, though.
Not according to Wikipedia, either, anyways.
Mm.
Wikipedia's changed too. But yeah, I think we've got to talk about that. Obviously, got to talk about the growth in certain stocks, not all stocks. One that I actually own didn't do very well. Great. But hey ho, it's what it is. But the reality is, most tech stocks in Q2 are going to be okay because I don't think we're feeling the effect with the technology world. It's more everything else that we got to worry about. And I think, as I said before in previous, look at Q3. Q3 could be more interesting because we're feeling the pinch and going into winter as well. So then maybe some spending habit changes. But overall, you got to think Christmas time, all that kind of stuff will probably be earning bearing. Some have hit, some have missed, some have really missed massively, but not too bad overall, right? But doesn't change things. The market's doing the same thing. Anyways, I was going to talk about something, but I've totally forgotten what to talk about. Certainly when it comes to recessions and stuff, but it kind of goes on the same thing of the media and the news. And I know we're all talking about like obviously company earnings and stuff, but recessions are interesting because it's not on the news yet, right? Realistically, no one's really talking about it. They're trying to deny it as much as they can, but everyone's talking about certain factors within a recession, which is important, right? We've got one tick in the box where we've had a decline in growth in the economy, right? two in a row. GDP that's gone down twice now. Probably going to go down a third time as well in the next quarter, but we'll see how things go. The problem we've got is obviously people don't want to say a recession, certainly in the media, because it's going to create panic. And that panic's going to create the lagging indicator, which is always very common with it, is job cuts. If people start talking about a recession, they're going to start cutting their jobs. They're going to start protecting for the future. That's when it gets worse. That's when certain things are happening. Right now, the job levels, as in unemployment levels, are at, well, pretty much low. Like they're low at the moment, right? But that could change if the media start talking about, oh, we're in a recession. Oh no. Oh dear. Spend money wisely, credit crunch, all that kind of stuff. Remember the olden days, right? So that will always create that panic. So just be careful with certain things like that. But that's why I'm saying, like, don't go full tilt investing in case something does happen, because that is a big red flag. If it gets worse, guess what? It's going to be getting interesting. Another thing we need to talk about as well is not so much Joe Biden being an absolute meme god. It's more the fact that we've got midterms in November. Midterms, I don't know much about the American election world, but ideally they'll probably want a healthy market. I very much doubt they would want to go, oh, we're in a recession, as they're trying to do their midterm kind of stuff to try and create a bit more backing from parts of the country that may well be battered with, you know, no money and no whatever. But that could be fun. Anyways, that's enough of that in terms of the basics. But we've got to be somewhat careful of what's happening, I still think. Certainly when we look at the price. We've had this, right? This was the market move that we were talking about over the last few days, right? We're talking about, are we going to get demand? We did, funny enough, which is good to see. However, the problem we've got is what we've woken up to this morning. It's a bit of a rejection candle, that. And I have mentioned before in previous kind of bits of content that this up here is probably going to be filtered and full of people wanting to sell and take profit, myself included, right? Said it before, if we get towards 28, 29K, probably take something off the table. If we get there, that's if we do get there. This is a thing, right? My personal opinion, it feels a bit like an obvious bear market rally. It also feels like a bit of an exit pump in terms of the stock market, right? We've got so many things pumping right now. And if people are trying to get ahead of the curve in terms of what I've talked about in terms of the media, oh God, there could be a recession here. Let's sell some stuff, but wait until it goes up a bit. Let's try and pump the market first. People don't want to sell the bottoms, even though we've seen, like, was it ARK or who was it, Kathy Wood, selling all the stuff at the bottom, literally. That was funny. But hey ho, we've got to be careful of that, and people will be looking to exit positions, and opportunity to exit positions is obviously on a pump, and we're pumping right now, so just be careful. So Bitcoin looks like that, looks great, kind of. It still looks weak in my opinion versus what it's done. You got to remember, if you zoom out on this, as I've said, we've done this, and it looks a lot. Doesn't look very good, does it? When you zoom out, it's like, oh, say it. It doesn't look as great, does it? But hey ho. The problem we got is we haven't really had a significant bounce, and I've said it before, since April time, right? So we've had this wick, we bounce a little bit, but this is more sustained and obvious bounce, which is good to see that level happen. But that being said, we're still in a downtrend. We're still, like, if you look at the weekly time frame, we're still in an absolute ugly looking downtrend, which is not great. We could go right up to the EMA 21 on the weekly, 29K. That would be, personally, a really good profit taking level. But for me, if we get there, is another story. I don't know if we will. Again, Ethereum looking a bit stronger, looking a lot better. Again, you're looking at $2,000 as a potential area of interest. And you just got to look at the fact that this really, if you're going to go from the swing high to the swing low, you've got a level right there. And that level will probably become very, very important. And still, you got to look at the fact that, look at how much this has dropped, a lot. And this is the first big pickup that we've actually fully had, a little bit of a run. So, as I said with my Twitter, don't get confused with a bull market. Don't get confused with a bull market cycle. It isn't the start of one, nowhere near. There's plenty of moves up and down. You just got to be careful with them. Total market cap, again, we're going to the first point, got there, finally. I am expecting this level to happen at some point, again, with the rally. If we hold, if we carry on, if it's sustained, remember, there's a lot of external forces that could pull us back down to these older levels, right? So this is why I'm saying nab the profit if you can, because there's still so many things that we need to look at and understand and discover, certainly when it comes to recessions, the media outlet, other earnings that could be coming in the next quarters. It's better to be safe than sorry, realistically. Like, if you're going to deploy all your capital here and at $1 trillion, great, crack on. But the reality is, if we do drop lower and there is bad news, or if there's certain economic things that will create a liquidity crisis, we've got a problem. And it's good to kind of get certain things out of the way and know that, yes, are we in a recession? No. Are we in a recession? Yes. That sort of thing, right? Keep it simple. But we don't know what's going to happen. In terms of plotting this move, again, we talk about this all the time, the dominance chart. Dominance chart, I need to learn, well, not so much learn, but I need to learn to put alert on this. Terrible for it. But we are in a nice little downtrend right now. Talked about it the other day in terms of if this does reject from this point, it could be very interesting. We did. And obviously the market's moved up. But I am expecting us to catch this level. This is interesting. We've stopped here around this point, and I've already talked about it. Bitcoin and Ethereum and stuff like that, they're at levels of resistance. We've rejected here, basically, stopped. Basically, we're saying that roughly this level is where that USD is. In terms of that, that would equal resistance, and obviously this is going to equal support. If we do bounce off that, it would indicate that essentially Bitcoin has rejected, and we're going to start coming back down again. So we'll see how it goes. But this is in a downtrend at the moment. Money flow is going in. But this is a big move, by the way. We've got to talk about this. If we talk about overall percentages, we've had a change of 5.82% in terms of how much dominance has changed, i.e. money's flowing back into the market. Money flow is important, right? So that's important. So yeah, keep an eye on it. Certainly it could bounce at this point and it could kind of turn around, which would indicate that resistance has happened, and you can maybe follow it down as a short potentially. It depends on how you want to split up your chart and how you want to do it. But me as an individual, I need to improve in my game because I'm always forgetting about this chart. I don't forget about it. I just look at it. I don't have alert on it. So sometimes it kind of just passes me by. I'm like, oh, poo. Oopsie, but hey ho. Anyways, that's probably me talking now. Over. One thing to finally cover on. Mentioned it the other day. Still looking relatively strong on the 3-day time frame, but it is pulling back. So that's one thing. We've dropped since 109.2. We're now at 105. So that's quite a big, significant drop. Looks a bit more ugly on the daily, but if you look in the weekly time frame, it still looks ridiculously strong. Still holding that EMA 8. So it's still strong. Higher time frames, it's still very, very strong. Still looking very good. Obviously it's going to be pullbacks and pushes and stuff like that, but again, longer term metric, it won't move very fast. Anyways, that's me talking. Done. What questions have we got, or if we do have any questions?
I don't think we do. Going back to what you're saying at the beginning about like midterms and a strong economy, etc. Yeah, it's pretty much bang on. When it comes to poor market returns, etc. The buck ends with the president essentially, and the party that's in charge. So yeah, coming up to midterm elections, if the things are looking gloomy, then obviously they're going to get the blame, and it's going to affect how people vote. So yeah, I wouldn't be surprised to see a little bit of market manipulation leading into it.
But it's the same in the UK,
and that's why they won't say the R word as well.
Yeah, they won't. Exactly. It's the same in the UK though. Yeah. The buck stops with the idiot, which is usually the prime minister. Let's look at this again. So if you're looking at this is the entire stock market, right? Obviously looking, wow, crazy. From the previous recession, yes, we're pulling back and we pull back. We were always going to bounce. Like no matter what anyone says, we were always going to do something. And yes, we had a 24% drop, which is quite significant. Certainly when you think it's only in a couple of months. Well, yeah, literally, like that's about 5 months work. Oops. And yeah, we're pulling back and it's looking good. But the reality is, if this is a continuation of the downside, we're just going to go back down to these levels, but it depends when. And if it is going to be a factor of midterms and looking at October, November, yeah, cool. But you got to remember as well, historically, September is a bad month, usually a bad month. So that could be interesting to see what happens there. So we may be, as we said in last week's live, we may well pump up until mid-October, mid-August into September. And then we may well see the red month of Bitcoin, which is weirdly always September. But we'll see. May change, may not. Who knows?
You got to remember when the White House was saying that back in the beginning of the year that inflation was transitory. And then where are we now? 9.1%. So you know that they're just kicking the can down the road, and basically whatever they say, do the opposite.
The thing is, right, they can't put the money printer on.
No, they can't.
If they do that, they're fucked.
You end up just getting hyperinflation,
which we already are at certain stages of with certain countries. So we don't really want to do that.
Certain countries are literally broken. Completely broken.
I mean, this is still a down. Like, it looks fine. Like for me, if you're looking at analysis, it looks like a proper downtrend. But that's just a DJI. We'll see what happens. But it's mental. It's mental when you start looking at all the kind of information out there, and it's like, right, the bond market, for example, looks like, wow, what is the bond market? Hold on. Can't remember what the ticker is for this. Is it 10? Jamie will probably help me with this one. Can't remember what the ticker. What's the ticker? Jamie, what's the ticker for the bonds? Because I can't really remember it. US, there it is, US. Is it that one? Oh, bear with me. There we go. So this is the bond market. The fact that that's dropping is interesting, but that's the thing. That's what we're after. We're after quantitative tightening to not be bought, as in the units of bonds via the government and not getting bought anymore. But is it dropping enough? I don't know. But that's giving you an interesting story. So essentially, if you're looking at the obvious, right, when you look at like the markets, look at that. That is kind of throughout history. And look at, well, are we going to go back down to these levels? Ooh, interesting.
DXY looks kind of similar as well, doesn't it? The dollar pumping back up to levels we've not seen in years.
But this is like a constant downtrend. Like, look at it. It's like peaks and troughs. But hey ho, I don't know enough about bonds. It's not really our era, is it? Like, it's usually the boomers. They're into bonds.
It's just because, like, more recently, well, back in the day, like certainly 2017 bull run, I don't think there was any sort of correlation between traditional markets and what we were doing.
We weren't big enough.
No, we weren't big enough. But I mean, we were obviously benefiting from the quantitative easing environment and lots of free cash floating about. But in terms of the actual correlation with S&P and the traditional markets, etc., and like FOMC meetings and CPI, like, it just was never impacted us before.
But well, the reason why was because the stock market was like this, like absolute parabolic through all these time periods. So when you think about cryptocurrency, yes, it was obviously Bitcoin was invented around this point in terms of on the open market. But when we look at like that market, right, it was just all parabolic anyways. And even though in the dips, you know, you could argue, yes, maybe a little bit of an impact, because this is when Bitcoin, remember the day, went from fucking 6K to 3K. That was that dump. But other than that, realistically, nowhere near. And even on this period here, where like obviously the COVID crash happened, everything happened, so that's fine. But when we look at the past here, even the bear markets of crypto was like what, 2013, 2014? This was still going rampant, right? Obviously, it pulled back here. This was when Bitcoin was bullish, going into 2015, 2016, going into that bull market, into the hype of that halving. So it's interesting to note that, but I think it's because of all the open gates now. There's a lot of open gates. What I mean by that is like a lot of institutions are investing in crypto a lot easier. When I was investing in crypto in 2016, it was a fucking nightmare. It was unbelievable. And it was like $200 limits. It was crazy. And there was nothing really for institutions to get in because the exchanges couldn't hold it. But you got to remember as well, going back in time, let's talk about it. You know, when we're going back to 2016, the market hold on, log scale needed. The market cap was only, there you go. Like when I was investing in crypto for the first time, we're at like a $9-10 billion.
Yeah, it's nothing.
It's like, and trying to get your head around that is like, what? And when I tell people the stock market wasn't interested, it wasn't a requirement, we didn't need to know all this shit. And people are like, why? Well, that's your question. Why would a 25 to $26 trillion market want to be involved in this? They're probably not. And now when we just look to the right, we're up here, 1 trillion, up to 3 trillion at the top. So that's why. And it's mental when you think, and that's kind of it. I know I say it a lot. And when people go, we're early, we're not early. We're not early. You're pretty much kind of at the point of you can make money. There is a lot of money to be made at the right times. But if you are like going, well, if you invested, you know, it's like the same people say, if you invest in the S&P in the 80s, you'll be multi-millionaire. Yeah, you will be. But you've also got to think of the future. If you're investing in your pension funds, in your index funds, in your stocks now, in 20, 30 years' time, you could be wealthier if you're doing it right. Same with crypto. It's all about being on the right side of the market, knowing how to take profits, knowing how to do stuff. But when people do say we're early, when your assets pumped 80% in a day, I'm like, oh, fuck me.
Yeah, I mean, you're not late, but yeah, you're not super early.
Yeah, there's times when you're late and there's times when you're early.
Yeah,
you're late
it's not
here.
a bad time to be getting in.
And you're probably at a good point down. If it ever goes down to like 300, 500 billion, like in this range here, you're probably thinking, I'm quite comfortable here. I can live with that. I can live with a bit of drawdown as well, because you know where the future ceiling could be and beyond. And I'm not going to try and create a little bit of FOMO here, but the reality is, I've said it before, the crypto market, $3 trillion, that is a local top. We'll probably go higher than that.
Yeah.
But that's obviously in 2024, 25, 26, who knows? You got to play the game.
Yeah. And it sounds really obvious, but as long as you don't buy the tops, you'll be all right. I mean, at the end of the day, in 2017, the people that bought 20K, I know it sounds like a long time, but 3 years later, you still tripled your money.
Oh, yeah. Everyone's talking about this at the moment. It's doing amazing.
Optimism could do it.
Like literally everyone's going, oh, what's this? Well, now it just came out and it just went boom.
What is it? Is it Ethereum?
It's a part of Ethereum. It's a layer 2 blockchain for Ethereum based. It's like Matic. Really.
Oh, a new idea. How refreshing.
Another one.
Are we not bored of this now?
A little bit, yeah. I often say though, like, yes, having the smart contract language for Ethereum is an absolute gift for any layer 1 or layer 2 blockchain. Like, I think that's why Moonbeam will do well. I think that's why Avalanche will probably do well in the future, because it's easy. Like, no one wants, it's like us buying a car, right? Imagine us going to go and buy a car now, but your brake pedal's on the other side of the car. It wouldn't make any sense. You'd be like, what the fuck am I buying that for? Whereas, you know what the obvious is. So same with cryptocurrency, right? The biggest smart contract provider, the easiest platform to onboard onto, you want your platform to kind of connect to it. It's kind of obvious. But that's just why I think the likes of Zilliqa failed massively, because it doesn't have that. It's its own coding language. This is why I think Polkadot will do well. It recognizes that language. Same with, as I said before, with Avalanche, done very well. Solana's a bit iffy. BNB, that's why that done very well. It recognizes that language. This is why obviously Matic and stuff and all the others have done really well. It's because Ethereum is fucking huge. And I don't think people realize how big it is only when it breaks, which is kind of why I don't like it. But hey,
I cannot believe Dogecoin is still top 10.
Mate, Dogecoin is an absolute, you know something? It's kind of worrying this. Look at it. Look, 59.5% down over the course of the year.
And it's still in the top 10.
Solana.
Unbelievable.
That's scary, really. I recognize the appetite for it in terms of a currency, as in like just a digital currency.
I recognize the
it's not an investment
in a bull market, but in a bear like this should be dying.
New website.
Oh, that'll be it then.
That's why it's pumped.
That's
New
why.
Website. No, I admire it in terms of it is a utility, and I'll say this now, it's probably one of the only crypto. Well, I say not the only. It's one of probably 100 cryptocurrencies is actually useful, i.e., its utility is to send money to people. That's it. And it works. And that's better than, I want to say it now, a lot of these projects that are literally ideas, which is on the back of a fucking sticky note. And look, a lot of coins will rebrand. They will redevelop and look at Zilliqa. It went from an enterprise blockchain to NFTs to metaverse to fucking probably selling cars next. So you got to look at that. And what's Harmony? Harmony, I think, had a hack, and I think they're going to go back to the drawing board. I'm like,
just restart the blockchain.
Fuck me, man. Like,
turn it off, turn it on again.
How many startups do you need? So yeah, that's an interesting point. But yeah, like I would never invest in Dogecoin unless like it's like really low and it's a bull market, and obviously the hype's there. But if people are going to me,
moon bag.
Yeah, if people are going to me, I'm going to buy Dogecoin because I think it's going to go to like $10. I'll probably just walk away and just jump off a bridge somewhere. But it's one of the cryptocurrencies that has a tick in the box. It actually has a utility, it has a community. It works in terms of if I want to send someone Ethereum and I had the option to use Doge instead, I'd probably use Doge because it's cheap, it's quick, it's easier.
Also got a fantastic Schiller in Elon.
Oh, yeah, and a few others. But there's nothing worse, and I've said this before, going onto your Ethereum blockchain or whatever and using an ERC20 and having to buy more Ethereum to just send something, it really annoys me.
So frustrating.
Oh, it's like you got to spend like money to get it. You got to then spend money to send to your wallet and then use it again. It's like, fuck off.
Especially when fees are super high as well.
It's like Chainlink, right? It's plumbing. It literally is plumbing. Other than that, at the moment, that's it. You know, there's no real full-on use case for it until it starts staking and all kinds of stuff around it. Like, yeah, it could be an opportunity, but it's not low enough. It's not low enough for me to get excited about it. Same with Near Protocol, not low enough to get excited about it. Atom's probably another one, not low enough to get excited about it. It's just kind of one of those things where, yeah, it's a bit dangerous in terms of the game I'm playing, but at the end of the day, like, you want to kind of get fair value. And I don't think some of these assets are fair, especially the high cap coins. We're talking about high caps here.
Yeah.
Whereas when you go further down, it's obviously different. There's some definite opportunities down here. But when you start looking like, I've mentioned it on my Patreon, actually, Near Protocol, like to go to all-time highs like a Forex, it's not really, it doesn't really turn me on, really.
I've said it before, like, I mean, you've said you want Ethereum triple digits. I've said BNB double digits. Like that's when you start getting, oh, okay.
If Ethereum starts going towards $700, I'll get a little bit excited. If it goes towards $500, I'll be like, right, let's deploy. And then when it goes below that, I'll be like, let's double deploy. Because I'll just get excited about it because I'll be like, right, I'll just buy like 50 Ethereum and just go, right, I'll sit on it. You know,
for people who haven't been through a bear market as well, what you want to be doing is keeping an eye on the top sort of probably top 20, seeing which ones sort of hang in there and perform well, and then really keep an eye on what projects are keeping busy and continuing to build and get partnerships through the bear market as well, because they're the ones that will perform well when things turn around again. And then, as we say, with the high caps, you just need to be a little bit more patient so you can get fair value for your money.
So that was the market there on the 10th of May, 2020, right? The top 20, give or take, provided some of the ones you want to ignore, like Hex, for example. But this was when I was like, the month before and this month was literally when I was deploying capital because we were low. And obviously we had a big, massive rattle, big shakeout. I already held my Binance, not my Binance, sorry, my Bitcoin quite close to my chest. Anyways, I wasn't really that bothered. I bought a little bit, not much, but as you know, I bought certain things, but that was a top 20. It changes a lot. It does change a lot, but you can see the amount of growth that was in the market. There was a lot of it. And look at Ethereum, look at, Binance Coin. Obviously.
Yeah, they're trying to break into the top 10 there.
Yeah.
That didn't do much this bull market.
Stella's a bit, I don't know. I don't really rate it, to be fair. I see the idea of it, but I just, it's not buzzy enough. That makes sense. It's decent, don't get me wrong, but I just think it's one of those ones where it's like Chainlink. It's like, yeah, it works. It's plumbing, it's great, but it doesn't have everything else to go with it that makes it go bang.
Didn't they get a partnership with Microsoft a long time ago?
I can't remember. Maybe something like that. But
because that's what excited me about it going into this bull run. But as I say, nothing. It didn't really.
This is always scary though. That like the previous bull market, it didn't do as well. Even though Bitcoin, this is price in USD as well. Bitcoin was 3-4 times as value at certain points.
Yeah.
And this didn't really keep up. So the BTC price of this is probably pretty minging versus what it was. So it just shows you how important Bitcoin is.
I was tracking it pretty close because it was one of my holds, and I was doing it quite regular updates on the weekly alts analysis as well. And it broke out, but then it didn't really kick on after that.
Yeah, it's a perfect project for like using, but it's kind of like that situation where you'd use it, but you probably wouldn't want to hold on to it, if that makes sense. It's like, I don't know, you've got to, it's like, that's like in the stock market world, like there's certain things you'd use, but you never invest in. It's just, they don't have that kind of growth. Whereas I look at crypto as a growth, what do they call them? Cyclicals, like growth market sort of thing where they'll go up and down. Whereas certain things just will not, they'll go up, obviously, they'll definitely go up, but they won't go up as furious as some of the others.
Yeah, they just don't have the hype.
Yeah, or the network effect of other projects that are like built or bolted onto it. Anyone got any questions? I know that we've probably glanced over a lot of them because we've kind of been waffling shit.
Okay, made a good point. Where was that? It was a little bit higher. There we go. RE September being a bad month for BTC. This tends to be the case for traditional markets as well, because September is when decision makers get back from holidays and portfolio begin to get rebalanced going into Q3, which is a good point. And also, this year as well, you've really got the effects of inflation hitting people hard as well, because we were talking about it last week. A lot of people would have been like, right, we're going to enjoy the summer because this is our first summer without any restrictions or that nonsense. So we're just going to go enjoy ourselves, spend our money. But then when we get back in September, and in the UK, energy bills are going to go through the roof again. Food prices are obviously up. Fuel hasn't come down from £2 really. So then people are going to be like, right, well, now we need to save for Christmas because we've got 3 paydays, and everything's through the roof. So yeah, I think September, and then obviously, as we know, we've got that break in the Fed as well. They don't get back for another 6 weeks. So I think this is sort of like the perfect environment for a continued rally in traditional markets, and then everything comes back down again in September. I don't know when the midterms are. When are the midterms? October?
Mid-November, I think. So I don't know, it seems far away, but I
can't see us rallying all the way into October. Like I say, I can't see us rallying past September. I think September is when the brakes come on. And as well, you got to think, if we pump into September and like OK says, where portfolio managers get back into their desk and have a look and go, oh, That's a lot of profits for a bear market. We'll take that off the table.
Well, you
Secure some
wouldn't even
profit
say that. They'd be like, oh, the recession looks a bit likely.
yeah,
Inflation's high.
Let's risk off again.
Unemployment rates are at the floor. That's going to turn around probably. I think people will be like, I think it'll be a simple, tighten the belt kind of exercise, won't it, realistically, when you think about it?
No one's going to have spare money to, and what we were talking about before, where crypto did really well whilst the stock market was doing well back in 2015, 16, 17, etc. People had the spare cash to go, oh, that crypto looks good. I'll take some profits out of my stock market and or my stocks, whatever, and chuck it in there and see what happens. People don't have that luxury now.
No, not if there's a liquidity crisis.
No. I'll go through some of these messages as well. So, okay, then said, I reckon macro events, FOMC, CPI, etc., started becoming more relevant to crypto markets given increased institutional involvement, which is a good point. And also, this is the first recession for crypto. And then he speaks to Jamie about bonds. Jamie reckons 2024, 25, 26 is what he's got in mind for a cycle peak, which is pretty much in line with most people. We've got halving midway through 2024. Usually a year after the halving is when things are pretty decent.
Usually.
So yeah, where around late 2025 would probably be when we might start to turn back into a bear market again. But it's all it's too far in advance to start making any proper predictions. We just have to go with the flow. Astute, can't believe Doge is a 9 billion market cap.
I can't.
And yeah, I think that's pretty much it. Nothing we've not mentioned before. Jamie says, Gaz, that's how I'm reading it. Rather, that's the impression I'm getting from macro sources. Looks like this rally in equities could last a few weeks, given the Fed's message has been read on the dovish side and there's no FMC till September. So, yeah, in fact, I'll share my screen. Everyone see my BTC chart?
Yes. Well, I can.
So, yeah, it's been a bit of a weird one. So last week, I was talking about we were having this pullback. We had a little local top at 24k, had this pullback, and we were looking for 22.7k to hold, and then 22 if that got broken. I said 22.7 was sort of my line in the sand for leverage trades. If that got lost, I'd get out. And then if 22k got lost, it was my opinion that we were going to go and hit 19k and potentially form new lows. And that was sort of my get out of my spot swing bags as well. So the market absolutely faked me out here. We had a big drop through 22k. And then when was the 26th? What day was that? Wednesday or Tuesday? Tuesday looked like we were continuing and then spike up. And then, as we know, on the day of the FOMC, if we break down to the 1 hour, it's like a slow grind up. And then right on the FOMC announcement, we just pumped straight back to where we were on the Friday the week before. So cleared the 22k level, cleared the 22.7. And then yesterday we had this nice little retest to confirm its support and then back up to range high. So yeah, completely faked me out there. And the analysis was based on the S&P, which has, again, played out pretty nicely. We were talking about this, I think it was nearly 2 weeks ago now. So we had the range high 4168, range low 3636, and we had this mid-range level at 3925. We posted this on Twitter as well, where I was basically saying if we have a break over the mid-range, hold it at support, then we could see a nice quick rally up to 4168, especially since price moved very quickly to the downside. When was this? 13th, 8th, 9th, 10th, etc. of June. So no real levels of support or resistance there either. So that sort of goes in hand with the thesis of a rally over the next couple of weeks as well. So it's a bit of a weird one at the moment because, as we say, BTC is right at resistance at 24k, yet the S&P still has more room to run. And as we know, if that runs, it's probably going to drag crypto with it. Ethereum's also at resistance, higher time frame resistance on the monthly. So it's right back up to that point, that breakdown point of the summer lows of 2021, and also, as I say, that breakdown point from May this year as well. So really sticky situation here in terms of, I could see it going higher, but it's not a good place to be. Not a good place to be buying either. So pretty difficult situation, really. As I say, the market just completely faked us out with this dump pre-FOMC and then a rally right on. So normally on FOMC and CPI days, you get this sort of wicks either side, taking out stops both long and short, and then you get like the actual move. But as I showed you earlier, it was just straight up as soon as the announcement came out, which I'm going to assume is basically because they didn't do anything unexpected. So that this was obviously the pricing in of the 75-point rate hike, and then as soon as it was confirmed, that was it. Off it went, and then there was nothing in Powell's speech that changed people's minds. So yeah, quick, fast move that I think has caught a lot of people out, and myself included.
I think that's the thing. It was like there's so many rumors and like news articles brought out about 100 base points. I think people are expecting it, and I think it's fucking mad. People were like celebrating 75 base points and like, oh my God, what's wrong with you? Like 6 months ago, we never expected that. Never expected 75 base points because it was like 25, it was zero for like years. And then 25, 50, 75. It's like, fucking hell.
People are already talking about the Fed pivoting when they come back. And I'm like, there's no way they're going to pivot before the end of this year. No way. They can slow things down. They can go 50 and 25. They can't pivot.
No way. They can't pivot for one thing because they've quantitative tightening. They're actually increasing the money flow out of the market from September onwards. So why would they pivot? Why would they increase money coming out and then decrease interest rates? Doesn't make sense.
No, it doesn't make sense.
Or at least go to negatives. They're not going to do that. Stupid.
At best, I mean, I'm no macroeconomic specialist at all, but I think at best, by the end of this year, they might get down to 50 and maybe even 25, and then maybe Q1 next year, there's a chance maybe you get a zero. But I don't see any pivot to it.
No, because you got to look at the data in terms of the previous levels, and the previous levels tell us it goes much higher. But you've also got to think we've never had a reading of inflation lower than the previous. Like, fucking hell, calm down, mate. I mean, I think we need to get at least 3 or 4 consecutive months of lower inflation before they start pivoting.
Yeah, you've got. So I mean, you got to remember as well. It's not like it's a little bit high. The target for the Fed is 2% year on year. We're at 9.1. It's not like we're at 4 or 5. Like there's a long way to go to bring that down. Jamie, who's our traditional markets guy,
newly promoted mobster, who's an absolute geek on all this stuff, which I'm like confused.
We like geeks here
sometimes.
But yeah, Jamie says even the bond market is living on a bit of hopium. They can't pivot till probably Q3 next year. Inflation seems to be stickier than everyone thought. Yeah, I mean, we were told it was transitory. What the hell? Can you believe they lied to us?
Can you believe that they changed the definition of recession? Oh my God.
Changing a lot of definitions recently.
No, I think that's, I mentioned on my Twitter, it's like, it's a dangerous game messing with, what did I use? Like, obviously, people are like using the markets, so like trying to save the markets versus people is an interesting thing because, like, I know they've been saying a soft landing, and yeah, obviously it makes sense try not to unsettle the market too much, but the reality is, you look at the S&P 500 and it is absolutely through the roof even still right now. And
what big picture?
The bigger picture is ridiculous, right? And this is the thing, we've got to try and look at that. And as much as, I don't want the markets to collapse. Yeah, there's a way of doing it and there's a way of not doing it. The way of doing it is stick to the road, stick to the plan, and just be through and transparent with it. If you're going to start unsettling it by changing your stance, it's going to make it worse. And by turning on the money printer, for example, from pivoting too early, for example, it's going to create more damage anyways, I think. So I'd rather just set the benchmark and go, right, we are going to do quantitative tightening for X amount of years. We're going to do increase interest rates to a potential level of X, Y, and Z. And basically, we're going to try and get us out of this hole. And if inflation comes down quicker than it needs to, cool. If it doesn't, cool. As long as it's coming down, I'm happy.
I think Jamie will correct me if I'm wrong, but I think were they not aiming for a 4% increase by the end of the year, and they're sat at about what 2.5 now?
I think I heard
about another 1.5 to go.
Yeah, I think I heard 4%.
But I mean, what we were saying, I think it was either last week or the week before, could easily see the S&P come back down to the levels we were just before the COVID crash and just basically just reset.
I think it can go lower than that.
Oh yeah, I think it could, but I think that's where at least we come down to.
That's where it probably will go in terms of like if you look at the probability. But the element is we don't know how people are going to react to, if we do go into well, I say if, the media. Let's talk about the media. The media have got such a big focal point on scaring people, and if that means let's change the unemployment rate because that's low at the moment, let's increase that by scaring everyone into losing their jobs. It's an important factor, but there's too many open questions that still need answered, and that's why I'm like, I'm not deploying capital just yet, just in case. But yeah, there's a few different things here. It's a lot to talk about.
Yeah, OK says a bit of a random point, but for those who put together their own top-down analysis for BTC, ETH, or any asset, one thing I found that really helps is to simply hide your drawings on TradingView, invert your chart, print it out, and have a little look at after a little break from the charts. Maybe even hide the axes to try and get a fresh perspective.
Yeah, it does work.
Not axes.
Inverting your chart and changing your colors makes a massive difference. Like it's huge. I don't know why it does that. It's like I always find that
your eyes just get used to seeing the same thing, I guess.
So I think as well, so as a break, and this is why I say to people, have a weekend off. Like it fucking infuriates me when people are looking for moves on a weekend. It's like, fuck off, like leave it alone. Last weekend we didn't move. This weekend we're probably not going to move. Like there's a lot of big people looking at these markets right now. They do not want to move it on a weekend because they're not there. And that's why they put those little cheeky little spoof orders in just to scare people not to do anything. And that's the thing, like if you have like 2 or 3 days off and you come back to it on a Monday, you will see a much better perspective. And that's what I do, and it helps massively. My Monday video on learning crypto, I usually don't look at the charts much. If I have to look at the charts, it's because something's happened. But last weekend, I was literally in a paint tub, literally painting all weekend. It was great, and nothing happened. So,
well, this is why we never enter fresh positions on a Friday morning on the Own Way Learn, because there's no point. More than likely, nothing will happen. I remember last time we did it, it was a dot trade. We entered it Friday morning, and it didn't move all weekend. And I spent my entire weekend kept checking up on it. I was like, I'm not doing this again. It's pointless.
Unless there's no one else wants to do it. Amazing opportunity where, like, I think I did one trade a few weeks ago on like a Saturday because it was like clear. It was like obvious. Like, oh, that's good. And then I didn't expect it to move as much as it did. But the reality is, you want the markets to be crap on a weekend. You don't want to because once you get consumed by it, whoa, it's really interesting.
You do. You need to have those rules in place where you're like that. Yeah, check it occasionally, but don't have any trades on. But OK says the reason they can't just lay out those concrete plans is because of the importance of expectations in the market. If the market knows what's going on to happen with certainty, some would say that the market would price in those events and central banks would lose their ability to influence the market. But yeah, I mean, they're also they can't be. It can't be completely transparent because then you haven't got a market. If everyone knows something's going up or something's going, because you need you need buyers and sellers, don't you?
Yeah, you do. You need
at the top of a bull market, you need people to sell into, and at the bottom of a bear market, you need people to buy from.
Well, there's that, and then there's being an absolute reckless and fucking doing whatever the hell you want because you're playing God. You can't have two situations.
For sure.
I just think there has to be an element of, obviously, a lot of people are saying shit and they don't actually have a clue. Like I've seen, like literally before the last inflation meeting recording, I've seen some big accounts going, "Oh, inflation's going to be like 2% lower this month." Fuck off.
2%.
I know. That's what I was on about. And even this morning, I was like, people are thinking this is a bull market, rookies sort of thing. Because
2% lower ended up being higher.
I know. Like this is what I mean. Like these had big followers as well. I was like, what on earth, man? But hey, people like to say stuff on Twitter to get people's reaction, and that's one thing people trade off. And I'm genuinely believe this, like the likes of Moon Cow and Crypto, I think they do the opposite to what they say. I'm pretty certain they do that.
The same with KSI. There's no way someone can lose that much on purpose. Like you couldn't do it on purpose. Like even if you tried to lose money, and who did it? I think it was it might have been Bitlord. He held this event whereby traders, they go in and it's something like you had to try and lose money. Like if you lost the most amount, you won basically. But people were making money because they were trying to lose it. So people were going short, and the market was going short, and they thought it was long. Yeah, basically they were doing the opposite of what they thought they were supposed to, and they were making money, which is pretty funny.
It's mad. I mean, I'm pretty sure if you could have an indicator on all the influences of what they've done, it'll be pretty interesting, because I think if you flip it upside down, and what I'm because it just makes me laugh how they're not fazed by it, like how they can just sit there, ignore it, and not react to any of it. Yet I couldn't do it. I think that's like morally wrong, but I do think they do the opposite. I think they've got two accounts, personally. But that's my part.
Wouldn't surprise me. Jamie said, from what I've heard since Powell's press conference, seems he was expecting this much of a reaction. Oh, sorry, he wasn't expecting this much of a reaction. Quite a few experts saying the market took Powell's message the wrong way. Personally, it seemed more hawkish than dovish. Anthony said, I'll just smash that competition without even trying. But yeah, it's literally so people were trying to get it. People were trying to lose, and they would end up making money. Yeah,
it makes sense though, because that's the psychology of the market. But I don't know. It's weird because, like, I think that's why patience is a big game of it. Like, right now, people are flapping. I know people are flapping because you can see it on Twitter. The euphoric behavior is there, and like, this is why I say just hold some crypto.
Well, I mean, look at this monthly candle on the S&P. I mean, that is a huge bounce, and that's got people scrambling, thinking, "Oh, I've missed the bottom. I've missed the bottom."
But that's like, I mean,
look at this candle. That was a pretty decent bounce as well, and then look what happened after that.
Yeah, no,
this candle was a pretty. Big
you can find loads of them. The problem is
the direction at the moment is downwards.
The problem is, and it's kind of obvious to say this, people are not thinking of the future. They're thinking of one day only. Like, it's always nice to look short term, but you got to look at the bigger picture. The bigger picture is always what if. And for me, we know the data of crypto. We know halving significance. We know the significance of potential recession. We know the significance of quantitative tightening. And we know the significance of what could be happening with certain bits of information that could be leaking out throughout the next few months. I'd rather just wait. And if this is the bottom, cool, right? But there's still plenty of ways to make money in the crypto market. But when you look at that, it's like, okay, if that is the bottom, I don't think I missed that much.
Yeah, for sure.
Get off the phone.
What are we off the bottom? 30%?
Remember the last bear market rallies were like 50%, and then it melted like another 80% from that. Oops.
Yeah, we've covered it on nearly every the past three lives. I think we've gone back and shown the bear rallies of 2018. But yeah, they were pretty brutal.
They were pretty big and pretty humbling. That's the word I love to use, humbling. They do humble you, and like I've opened my hands up quite a lot of times, and I openly said I lost a lot of my money in that bear market via being an idiot. Yep. And you do. And this is why I'm nice and cautious and relaxed. But I'm also in that position now where I've got the profit, I've secured the bag, I'm sitting on it. Yes, it's great, lovely, happy days, I've got profit, but it's all about knowing when to deploy, and it just doesn't feel right, personally. Like, there's a feeling in my gut saying, I'm happy with the 20-25% that I'm holding in crypto. I'm happy with the 75% kicking about over there, just chilling on a sun lounger right now. I'll deploy it eventually.
This is a good one. Obviously, this is going on YouTube. This is a good one for those that weren't around in 2018, not experienced a bear market. Look at these rallies we had. We had 61%, 96%, 52%.
They're dangerous.
But ultimately, we ended up down here at 3K.
Oh, mate.
Just be careful. You don't want to be buying these at the tops.
If I said to people now, right, if we go to 28K, right, cool, but you don't take anything off the table, the question is always going to be open. What if we go down to 13K from here? You'll be absolutely kicking yourself. And yeah, it may not happen, but it could. This is why you've always got to preserve your capital, take your profits when it gives you them, and most importantly, try and, buy at the right times. And easier said than done. If you bought 18K right now, or 19K, 20K, and we do go to like 30K, that isn't a bad place to take something of it, even if it is 20%, even if it's 25%, whatever, doesn't matter. At the end of the day, even if you're thinking long term, there's an opportunity there for you to gain a little bit extra in units, and gaining those extra units is how you grow, how you survive, how you make money. And that's the thing, like, you just don't know where it's going to go. And if that is a 50% correction, cool, happy days, well done. But the reality is, if you sell there, you've got a much higher standpoint, and you've also got a much, bigger potential of making more units. Because if that even goes back down to 20K again, you've gained a lot of money.
I mean, in my opinion, ETH's a great zone to be taking some profit. If you bought down here, it's literally 100%. You've doubled your money from here.
I did that with my Bybit account.
And as I say, we're at monthly resistance here. There's a clear level of support that's flipped to resistance. Yeah, we could go higher, but definitely be selling a little bit.
I did that with my Bybit account because I play in the base currencies. My aim is to get my Bybit account to 6 figures by basically just trading the base currencies, buying low, putting money in at the right times, trading it, using the little grid bots, whatever it may be, and just build it. But the one thing that I did like 2 days ago, well, actually, no, it was 3-4 days ago now. It was before the dump. I didn't put my money back in. I took I took 50% of what I had into USDT just to sit on it because it keeps the dollar value high. It will probably go back down again. It's just one of those things. And I'm still, I say I'm trading lightly at the moment, but at the end of the day, it's just like, I'll just grow it over time. In 2 years, that account should be pretty flush, hopefully.
Yeah. But yeah, just going back over what I said earlier, we're in a tough spot right now because ETH and BTC are key resistances, yet the S&P probably has a bit more room to go. And for the macroeconomic reasons we mentioned before, we could see a bit more of a run over the next few weeks. But yeah, would like to see a pullback first, but I think everyone would. So probably don't.
I'm personally not that fussed at the minute. I'm quite happy with what I've got, but ultimately I know everyone's like scrambling a little bit. But this is where you make money though. Like, I know it sounds a bit obvious saying this, but this is when the money's made for the bears. This is when, like, when people start scrambling and they start loading into those areas of interest where they will sell, it's where, like, essentially the newbie loses the money. And we've said it before, it's kind of obvious, but this is where you don't want to buy.
I mean, literally from the bottom of, was it Wednesday? We're almost 17% up on BTC without a pullback. So, when you're feeling that FOMO, that's when you're literally that close to just giving in and pressing buy and capitulating. That's when you're like, right, there's a local top probably coming in soon.
There's 2 ways to lose money in the crypto market. It's very obvious. Selling the bottoms and buying the tops. Simple, right?
Especially when you're doing both.
When you, yeah, the zigzag. Oh, shit. But, sell. Oh, no, it's gone back up. That happens.
I've lost units and
money. And your will to live. Where's the rope?
Yeah.
That's what KSI trades like, I think.
I don't know. I don't think the macro bottom's in. I think we've still got a lot of things to sort out. I think Q4 looks pretty ugly, macroeconomic wise, traditional market wise.
This is why, like, a lot of people ask me questions. Why do I have like a semi-automatic trading bot on my Bybit chart on EMA crossovers? Because the market will go up and down, and I'll catch a bit of it regardless, right? Yes, I've cocked it up a little bit. I'm still playing with it. But going on to the daily time frame, if you put a very, very simple momentum sort of indicator on there and you're following the crowd, and even if you catch 20, 30% of the move, even if it is about 40, 50%, it always keep your account flowing. And this is why, like, buy low, sell high works, and sell high, rebuy back lower works as well. It's kind of sounds obvious, but you want to have that as a rule base and a no emotion attachment to it, which is what an indicator will give you if you know what you're looking for.
Yeah,
but
that's
the reality is, I've seen it on my Discord, like the amount of people asking the question, what is OP? The only reason why they're asking it is because it has actually went up about 80% in one day. It's like, why weren't you interested in like 2-3 weeks ago? Probably weren't. Green candles.
Why do you want to buy it when it's already that? And I've always said this as well. People, when they FOMO into things like that, it's not because they're thinking about the future game. They're getting in because they've missed out on that 80%. They want that 80%. That 80%'s gone. You've got to think, where could it go from here? Do you think it's really going to do another 80%? Or do you think it's going to do maybe another 10% and then pull back?
It's a hard one.
It's obviously easier said than done, but you got to jump on these things before they go out of control. It's a bit like, well, as I say, Ethereum's down 100%, Matic's down like 200%. I bought the bottom on Matic spot, and I took profits at like 50%. I was like, bear market rally, I'm well happy with 50%. And I'm like, oh, okay, now it's just gone down 200%. It is what it is.
Oh, quite a few questions coming in. I have to end it soon as well.
Oh, yeah.
People FOMO trying to sprint in a marathon. Literally, yeah.
Yeah, that's true. Okay, says maybe foolish of me, but I've largely lost interest in following things like what the governments say about crypto. I'm taking the opinion that the charts will more often than not tell me what to do, and governments more often than not mislead the masses. Yeah, that's true.
Well, yeah, that's the thing. Like, the news will try and get you into the market, whether it's out the market or in the market, and that's what the fear is for. This is why I think the fear of recession is going to come at some point.
I always use, I think it's the CNBC example where you heard nothing about crypto and XRP. And then when XRP hit $3, they literally had a segment where they showed people how to go onto an exchange and buy Ripple at $3.
And then they told you how to sell it at $1. Great.
Like, genuinely, you will not make any money watching the news. If BBC comes on at 6 o'clock news and says, buy Bitcoin, it's the best investment ever, sell everything you have. They did that with metaverse tokens. I remember posting it in the Telegram chat. I said, guys, the end is near for metaverse tokens, because they went on again. I think it was CNBC. Is that Kramer?
Oh, he's a fucking top singer.
He said, here are the 3 top metaverse tokens. I was like, guys, they did this with Ripple. Like, get out.
It's the same with South Park. South Park did an episode of NFTs.
Yeah, NFTs.
Sell it all.
Jamie said the only way to really learn lessons of buying top and selling bottom is to go through it. And yeah, it sucks, but that's why we always say you got to stick around, no matter how painful the transition was from bull to bear market, whatever you've lost, etc. You have to stick around, because the bear markets are where the opportunities are. If you quit and give up, you will, the time you come back will be when Bitcoin's already broken all-time highs again. Like, a lot of people, I got loads of messages from people who I was talking to in 2017 and 18 about crypto. Didn't hear from them again for 2 years. And then as soon as Bitcoin broke 20K, 30K, I was like, oh, mate, what's good to buy? I'm back into crypto. I literally had a quote. Someone said, I've wiped the dust off my ledger and I'm back in. I was like, come on.
I've had people like that, though. We get loads of members like that. I don't really care anymore. It's like, they come back, they ask you questions, and then they vanish again. It's like, right, whatever. Like, I've had people come to me going, oh, I've got like 60 grand from this house sale. What do I buy? Where were you like 12 months ago? Fuck me. Like, honestly, like, oh. But hey ho, it just happened. Just had a question from LJ. Do you think gaming coins will do well in the next bull run? Probably, but it depends how many new people come to the market. Gaming coins are a bit shit, in my opinion, because it requires just one niche. And that one niche is often the pleb. The pleb is a normal person who comes in the market at the wrong time. And that's why they go up. Simple as
that. Jamie said, where is it? Lost it. The exception. So where I said about if it's on the news, then get out. He said basically the exception is Bloomberg. If you want a good news source, that's the place to get it. And I think you agree with that, didn't you? Actually, use Bloomberg.
Bloomberg's decent for overall news. I like Seeking Alpha for the articles from the the individuals as well, because there's a lot of expertise, and obviously, like news is news. Like you need to know the news, but there's a different type of news, isn't there? There's a type of news where they do a special feature on a certain thing because it is in a hype bubble, and all they're doing is a bit of psychology as well. They're using the mass of the people to get audience. It's like how events in crypto are run. They're run by, let's pick, or even CNBC or Fox News, whatever. They pick the biggest influencer with the biggest following because they're going to get traffic from that audience group. So they don't pick the people who know what they're doing. They don't pick the good projects. They pick the ones that are the most hyped. So there's a very big difference between news and a special feature. So like when you see Moon, Cal and MM Crypto and certain people on certain channels, it's not because they know what they're talking about. It's because they've got a lot of freaking plebs behind them. And it's like, oh, we can just advertise on these guys and we can make money for our own brand. That's kind of why Crypto Banter bring on certain people on their channel. It's not because they're helping his channel. It's because they can get more followers. That's kind of how it works. That's why people sniff asses. That's why people do giveaways with certain people and try and grow a following, because they can make more money. I know I'm going on a tangent, but that's kind of how the game of an influencer works usually, especially in crypto and finance. It's who can shout the loudest.
Yeah, you
right.
don't need to know what you're on about. You just need to be entertaining and have a big audience.
There's a lot, like CNBC's all right, but the reality is like Jim's does my tits in. I can't stand him. He sounds.
Coinbase was going to go to $400.
Oh, mate, he sounds stupid. Like it's not even that. Some of his other calls have been horrendous. I'm pretty sure he said sell Tesla at like fucking $100 and it went up to like 1,000. Something like that. It's like, oh, what, man? But I like the stock market quite a lot, to be fair.
Have we got any final questions before we wrap up?
We do. I'll let you read it because I'm going to cough.
After solid projects in a bull run that do well and bear market comes, is there a chance the solid project might not come back to all-time high in the next run? Yeah, I mean, we literally showed that with Stellar earlier, and yeah, it's a good point. There are coins that, yeah, they do well in the following bull market, but they don't necessarily exceed the previous cycle's all-time highs, which obviously is disappointing. But then at the same time, if you get in low enough, like you still get really good profits. But the rest of the question was, especially if there are newer projects that are effectively the same. For example, Kusama did a good run in the last run. Is it likely to do it again? And this is what we say, like, you just got to keep your eye on the project, what it does in the bear market, how it fares in the rankings, etc., and develop. That's why as well we say you want to keep a small portfolio, like a maximum of 6 to 8 altcoins, because trying to keep an eye on all of those, both in prices and in terms of like developments and updates and stuff, it just, like, if you have like a 20 coin, sorry, recycling blokes are. Yeah, if you have like a list of 20 altcoins that you're trying to keep on top of, trying to juggle all those plates, it's like, yeah, it's a bit of a nightmare.
The thing is, nothing is guaranteed in investing. Like,
no, exactly. As much as we all love DOT, there's no guarantee that it will do well and surpass previous all-time highs. It's like it ain't guaranteed.
You don't know what's going to happen. Like, no. Can go into oblivion. Like, it can go completely shit-shipped. Like, everyone's devices might just explode. Right? It's going to create a problem. So you are basically putting all your trust into a lot of people and a lot of things. Like, look at Solana, for example. It's on paper a great project. Doesn't fucking work though, does it? Let's be honest. And the thing is, everyone looks at price, and price is the biggest metric that people go for. The price is irrelevant. It's everything else that makes the price work. And if it doesn't work, it won't make the price work. But this is why people go to influencer marketing. This is why people go to influencers to push their project. And it's kind of, it works. This is how you make money. But I reckon there's only about 10 solid projects in the crypto market that you could probably trust your money with. And even then, most of them are stable coins.
Yeah, no risk appetite. Anthony reckons the only 3 safe investments in crypto are BTC, ETH, and Doge.
And probably die.
Okay, so does anyone know of any sites which aggregate things like number of developers a project has? I've seen some Twitter charts showing number of developers on Ethereum and DOT, but no centralized source as far as I know.
No, but you can build one. The only thing I use is proof of GitHub on Twitter, which is a Twitter account, which basically they show you like a chart of how many people are doing commitments, but that's it. Like, it's just GitHub's the biggest one, like for me. But hey ho. Anyways, I think we should wrap up because it's getting rather long, and this is going to break my laptop. Saving it. But yeah, it'll be on YouTube anyway, so like you can watch it on there or on the platform. It'll be on the platform later on today, as normal. But yeah, the market's pretty much in one of those territories at the moment.
Be cautious, is all I'd say.
Don't buy the tops.
Be careful.
Buy supports. Just even if it breaks out of resistance and you're buying a support, yeah, good. That's a good start. Good stop loss, all that good stuff. Don't ape into it, think it's going to go forever.
Yeah, have invalidations, use good risk management, and yeah, you can buy here if you want. It's there is a chance we break out, obviously, if the S&P rallies, but just have your invalidations there where if it doesn't and it goes past a certain point, you go, okay, I'm wrong, I'm out.
I'm wrong. I'll happily lose 1% of my account. Happy days. Because let's be honest, there's another day tomorrow.
Yeah. Just don't blow up your account